Hello and welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data, including major markets news, analysis, and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. In recent years, I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. A second successive week of gaps as markets awake to a no vote from Greece. Fireworks can be expected in this week of politically driven sentiment as the standoff between Greece and the Troika continues. Non-farm data last Thursday was not too bad and also not too great. Non-farm payroll fell slightly short of the 230,000, but not too bad as long as it remains above the 200,000 mark. Also, unemployment fell further to 5.3%. The highlight will almost certainly by the FOMC minutes. I retain the view that the Federal will keep rates on hold this year, which is even more likely with the current turmoil surrounding Greece and the Eurozone. In Australia, the main focus this week is the cash rate decision and the RBA statement. Before the weekend, the OC dipped to 6 years low after poor retail sales, with uncertainty from Greece adding further pressure. The no vote from Greece has since seen the OC gap down further to its lowest since May 2009, with an intraday low of 0.746. The British pound continues its ascent against commodities currencies, whilst the net positioning of large speculators on pound futures reduces its short exposure. The FTSE 100 has gapped down further to a 25-week low, fully embracing the risk of environment from Greece. Dragged down in particular by industrial metals, aerospace, defense, and technology. Monday is an important day for future monetary policy from Bank of Canada, as we have IV Purchase Managers Index and Bank of Canada Business Outlook Survey. Whilst the Bank of Canada have retained a neutral stance regarding monetary policy and for rates to remain on hold, recent data is adding further pressure to a dovish pace ahead. With the no vote firmly secured by the Greek Prime Minister, the attention will now shift back to the negotiation table. The Greek Prime Minister now thinks he has leverage for the relief with a no vote, so in a stronger position to get better terms. But early comments from Germany suggest the Troika will stand pat and try to force them to take or leave the previous proposals. This is likely to keep volatility and uncertainty high on the euro crosses, stocks, and bond markets. So it's all about the politics between the two sides and is likely to drag on for many weeks beyond this week. We will watch these events this week. Tuesday, July 7, 4:30 a.m. Australia RBA interest rate decision. Wednesday, July 8, 6 p.m. FOMC meeting minutes. Thursday, July 9, 1:30 a.m. Australia employment change. 11 a.m. UK Bank of England interest rate. Friday, July 10, 12:30 p.m. Canadian employment change. And all of these times are GMT. I will talk in more details about some of these news. Australia interest rate decision will be released on July 7th at 4:30 a.m. GMT. So Australian interest rate decision is expected to remain unchanged. So I would remain on the sideline and only take a trade if we get a surprise decision. The Australian interest rate decision forecast is 2%, and it was previously 2%. The trade plan. If RBA decide to cut interest rate by 25 basis points, we will sell Australian dollar. If RBA decides to keep hike rates back to 2.25%, we will buy Australian dollar as market is expecting an unchanged verdict today. Ultimately, we are a bit bearish on the Australian dollar as RBA has opened the door for rate cuts, and considering recent drop in crude prices, RBA definitely have room for rate cuts. And as we can see from the history, the rate cut, the interest rate was not changed since March this year. Australian employment change will be released on July 9 at 1:30 a.m. GMT time. Australian employment change will definitely be a market mover as recent RBA rate decision should set the tone for the Australian dollar. If we get the release in the same direction as of the RBA rate decision, we should see plenty of impact, thus more momentum for our trade. If the opposite is true, then we could wait for the market to settle first and then take the trade in the direction of the RBA meeting. Australian employment change forecast to be 0. Previously, it was 42,000. And Australian unemployment rate forecast to be 6.1%. Previously, it was 6%. Our trade plan. The deviation that are looking for is at least of 25,000. Historically, 25,000 to 30,000 of difference has produced about 40 to 50 pips of movement in the direction of the difference most of the time. So expect to see the effect of this news to last minimum 45 minutes to 2 hours in the same direction of the news. Typical news effect should last under 2 hours from the release. One other important news to pay attention to is the unemployment rate, which is expected to be at 6.1%. If we don't get a conflict with the employment change, then we will proceed with the trading plan. We will look to trade this using after news retracement trading strategy. We will wait for the market to retrace after the news release. So news release first, then retrace. And stay out of the market during the release time. If we get plus 25,000 of release, our bias will be to buy Australian dollar against other currencies, or to buy rise or up option. If we get a minus 25,000 of release, our bias will be to sell Australian dollar against a stronger currency, or to make down option or fall option. We will only enter the market after we see a decent retracement from the initial spike after the news release. And if we get those release numbers, the deviation of 25,000 in plus or in minus. UK Bank of England interest rate will be released on July 9 at 11 a.m. GMT. UK BOE interest rate decision will probably be another non-event as usual, especially considering how the MPC usually doesn't release any accompanied statement with the decision, unless there is a change. A market will probably just ignore this release. However, if we get surprise decision, we will follow our trade plan that I will talk about it soon. First, remember, UK BOE interest rate forecast to be 0.5%. Previously, it was 0.5%. And another important thing is APT, or asset purchasing target, forecast to be 375 billion. Previously, it was 375. So now, how to trade this news? In the extremely unlikely event, Bank of England hikes rate to 0.75%. We will buy pound immediately. Because of the level of this surprise, I think we will see a strong trend change for the British pound in the next few weeks, if the interest rate become 0.75. On the other hand, if we get a surprise increase to 400 billion or more in the APT, or better known as quantitative easing, if we get the surprise to be 400 billion, it would send a bearish signal to the market, and we should sell the pound in the short term. However, further stimulus is likely to help the pound in the long run. So if you missed the original sell entry, I'd suggest to buy pound instead at support levels, only in case of the quantitative easing become 400 billion in this release. There is also a possibility for a third scenario, Bank of England cutting rates to 0.25%. And if that's the case, it should be a sell on the pound. Canadian employment change will be released on July 10 at 12:30 p.m. GMT time. We will be getting the Canadian employment change release number, and it is the only high impact release for Friday. Therefore, we should see plenty of market reaction, and thus we should follow our trade plan. But first, remember, Canadian employment change forecast minus 4,500, and previously it was 58.9 thousand, as you can see. And the unemployment rate forecast to be 6.9%, previously was 6.8%. We will look for deviation of 25,000. Our trade plan. What I am looking for is a minimum deviation of around 25,000, or the difference between the forecast number minus 4,500 versus the actual release number. If we get a positive 20,000 of release, we should see demand for the Canadian dollar price. Therefore, we should buy Canadian dollar against weaker currencies at the time. However, if we get a negative deviation such as minus 29,000 or worse, we should see some weakness in the Canadian dollar. And with weakness of Canadian dollar, it will be our turn to sell the Canadian dollar against stronger currencies at the time. We will also pay close attention to the unemployment rate, which is expected at 6.9%. As long as this number doesn't conflict with the employment changes, we should follow the direction of the news release. If we get a conflict, such as better employment changes but higher unemployment rate, then we will need to look at the context of the market before taking the trade. So if we get a conflict, we must wait and look at the context of the market before taking the trade. We will be looking to trade this release using after news retracement method that I described earlier. We will wait for the news release and retracement, decent retracement, then we can enter the market depending on the direction of the movement and the news release. This was a news that you should watch and pay attention to it for the week. If you want to watch this video again or the webinar, you can watch at binary.com YouTube channel or at my website ihabjubail.com. So then, I'd like to thank you for attending today's webinar. We will hold the following webinar next Monday. Please stay posted on my web pages and binary.com, and hope to see you on my next webinar. Goodbye and see you next time. Bye-bye.